We've had two of these calls in the last 6 months since we listed, and the feedback from shareholders has been really positive. The format for today's call, I'll give a brief intro. John Leather, our Chief Operating Officer, will give an operational overview of the portfolio and where we're currently at and the plans for the next couple of months. And then I'll give a commercial overview in terms of potential news flow, deal flow, all of those types of things. And then we'll probably facilitate, we're quite open then at that stage to have a Q&A session. So just by way of background, excuse me, for those of you who are not too familiar with United Oil and Gas, we are a former Tullow New Ventures team. We started the company in April 2015. We acquired our first license in August 16, which was PL090 Watercross, which is our onshore UK license. In March 17, we agreed on a farm-in option agreement with Po Valley to farm into the Ptera Galena license. That crystallised upon us listing on the London Stock Exchange, which we did on the 31st of July. At the same time, we raised £3 million sterling. Since then, we've added 5 more licenses to the portfolio. We've drilled a successful well in Italy, which has delivered extremely impressive flow test rates, and the company is now firmly on the road to production. And on top of all of that, and most importantly, we've looked at the share price, and I'll talk about the share price a little bit later on. So that's a very high-level intro to United. Our strategy is to build a low-risk business in Europe with near-term activity and add high-impact, big-bang exploration opportunities in Latin America and Africa. Why do we take that approach, or why is that our strategy? Essentially, we've just seen too many companies come and go that have fallen over because they have put all their eggs into one basket or one geographical location. Our intention is that we build a high-impact portfolio in Latin America and Africa, and if one of those opportunities come in, it'll be a great day for our shareholders. But on the opposite side, if one of them doesn't come in, the business doesn't fall over and shareholders don't get wiped out, because we still have a stable, strong, solid business growing in Europe. And we've managed to build a platform of a portfolio that fits within that strategy. So I'll hand over to John, and John will walk through our assets and our portfolio, and he'll give you guys an operational update.
Thanks, Brian. The portfolio is a little bit larger now than it was when we last spoke, so I'll probably try and go through each license fairly quickly. The plan is first to give an update on the well that was recently drilled in Italy in the Ptera Galena license. I'll then run through the licenses that we've recently acquired with deals with Corallian Energy and with Swift Exploration, and then give an update on the existing licenses we have as well with the Watercross and then Jamaica. So starting off with Italy, we drilled the well, the Podomaior well, that successfully drilled in November, December. It was targeting an up-dip portion of the Selva field that was shut in back in 1984. There was a previously undrained part of that field. The well was very successful. It found a gross sand interval of about 62 metres, with net gas paid within that of 41 metres, in really excellent quality reservoir. We're talking porosities here of about 28%. Now those sands are split between two intervals, an upper interval and a lower interval, and both of those sands are actually at higher pressure than had been anticipated pre-drill. And when they were put on test, they flowed at test rates, again, higher than we had been expecting. So for the deeper reservoir, the C2 reservoir, that flowed at about 150 million metres cubed per day, which is equivalent of over 800 barrels of oil per day equivalent. Flowed, and that was on a 3/8-inch choke, and flowed with no formation water being produced. The upper sand flowed also at very good rates, around about 130 million metres cubed per day, and again with no formation coming through. Now one of the things to point out is ultimately those flow rates were constrained by the flaring equipment we had on site. And despite the fact that actually after the initial flow rates, when we realised that we were going to be constrained, we brought another flare stack out. So we ended up with 2 flare stacks there. We were still limited by the equipment. So the reservoirs could potentially produce at higher rates than that. However, I think what we want to do now as a JV, and what the plan is over the coming weeks, is really come up with the most sensible development plan to optimally recover the gas from these 2 reservoirs. We're meeting this week with the partner, where we'll be looking at putting together, submitting an application permit through from exploration to exploitation, and basically moving this to development and getting it on production as soon as we can. One of the things that came out from this result was that the 2 sands, they had different gas-water contacts, which is actually really intriguing and does raise the clear possibility that there's a number of other undrained sands around this structure. So we were always keen to get after the exploration, which sits to the east of the field that's on production, the East Selva gas field, which we think could potentially have over 30 BCF recoverable from it. But we're also now keen to look for further infill drilling opportunities around the structure itself. And I think what we're looking to do is get 3D seismic as soon as we can, accelerate that, hopefully start the planning in the next few weeks for that, and likely do the acquisition maybe late this year, early 2019. And if we get that data, that will really highlight where these gas accumulations are and enable us to be very targeted with our drilling. So that will be progressing in parallel to the development of the field we have. And I should also say the development we have, the single well that we have there, that has been suspended, it's completed. We can put that well onto production, and given the previous wells on the field, expect that well to be able to fully drain the reserves. The reserves are in place there. In terms of size, we're still working on the volumetrics of what's been there. It's still a work in progress. Our view is that it's pretty close, probably a little bit more than the pre-drill base case. So something just over 17 BCF recoverable. So that's the update on Italy. So moving on to new deals. First of all, I'll talk about the license 1918, which we've acquired a 10% stake from Corallian LNG. We've acquired that stake in agreement to pay 13.33% of a well planned on the license in April or May of this year. Now this license, P1918, is situated, it's just offshore southern England. It's literally a few kilometres to the south of the Witch Farm field. And Witch Farm, which we may have mentioned before, it's the largest onshore field in Europe. It's produced over 500 million barrels. And it's a play that we have been chasing onshore on our PL 090 license. And again, it's a play we're chasing here with this well coming up, which is going to be targeting the Coulter prospect. We just feel that when you've got a field of that size, there is clearly, it's the potential of the area has not been realised. There's a lot of options that you'd expect there to be other, not necessarily fields as large as that, but fields that are definitely going to be material, and that's what we are actively chasing here. So the well's targeting the Coulter prospect. It's the same Witch Farm play. Although we're calling it a prospect, it's actually an appraisal well. In 1986, the 9811-3 well found a 10-metre oil column in the Sherwood sandstone. It's in a complicated structure, and what's been done over the past 6 months is that the seismic data over it has been reprocessed. That's helped show the definition of that structure and show that there's a clearly significant potential up dip of that well. And it's that potential that we are targeting with this well coming up in April, May. The well will be drilled by a jackup. It likely cost about £6 to £7 million. Exposure is likely to be less than £1 million to that. Although the well will be drilled via a jackup, the development, most sensible plan for that is likely you could reach this field via extended reach drilling from the Witch Farm facilities. So given success, we think that that's likely to provide the best option for development. And I've looked at that case when we've been doing our planning for this. But essentially, we really like the structure. It's clearly low risk in that it's already been proved that you have oil there. We can see the structure extends up dip, and we think, I mean, to be honest, our view is probably slightly more negative than the operator's view. We still think it has clear potential to have over 20 million barrels recoverable from this structure. So again, it fits very well with our idea of chasing near-term activity, low-risk opportunities within Europe. The other farming deal we recently completed was on license P2264, which is in the UK Southern North Sea. It's block 4929C. We agreed a farming option with Swift Exploration and Stella Matvich Industries to take 24% of the license, paying 30% on a well on the Acle prospect that they've identified. The Acle prospect, it's in the middle of the prolific Rotliegans gas play. There's a number of neighbouring fields. You've got Davy, Garwain, you've got the Sean fields very nearby. And the prospect is a very clear four-way dip closure within this, where every bump is essentially filled with gas. So although it is exploration, it's about as low risk exploration as you can get. And just, the volumetrics we've done it, we think it's clearly got potential to hold more than 100 BCF recoverable. It's held, as I said, by Swift and Stella Matvich. Now, they essentially promote companies. They hold it on the license on a promote basis. And they've been looking to get partners in to fund this well at a 100% level. Now, there's some obvious candidates in the area, one of them being Orange and Nassau. They have the Sean facilities nearby. And Orange and Nassau have expressed some interest, but we're unwilling to come in at a 100% level and cover all the well costs, which is really what we saw the opportunity. And we saw the opportunity to come in, pay 30%, which would make it more attractive to the likes of Orange and Nassau, and that's why we have the option on it, dependent on other companies come in. Now, even if Orange and Nassau do not come in, there's already, since we farmed in, speaking with Swift Exploration, heard there is significant interest from other companies looking to take part in this. So the timeline on this is we expect to be making the commitment to drill the well later this year, and with drilling then taking place in 2019. So that's hopefully giving you a pretty quick overview of the new licenses we have, and then just to give you an update on the existing licenses. Waddock Cross, I already referred to. That's our onshore license, again, fairly close to the Witch Farm field. We are expecting, there's two parts to that license. On the Waddock Cross field itself, we're expecting the technical work that's being done on that to be completed in April of this year. The work date, this work was looking at really nailing down as accurately as possible the shape and geometry of the structure. And the wells that were drilled on this to date have all been drilled very close to the oil-water contact on the flank of the structure, and we're looking to target a sidetrack from those wells up into the crest to the north. And what we want to make sure is that well is actually targeting the crest in the optimal position. And it's quite a shallow field. There's a lot going on in the very shallow surface with velocities. We're really trying to nail those down and make sure that the image we have of the subsurface is as accurate as possible and that well goes in the right place. Everything we've done so far looks pretty positive on it. In fact, it's actually bringing that crest further up. So we do expect to be committing to a well in April, May time. And our intention is we're still targeting a well to be drilled this year on that structure. Modelling work, possibly referred to before on previous calls, the modelling work that's been done is, yes, you get 10-15 metres further away from the oil contact. These wells could easily do 200 barrels of oil per day. And given that it's potentially such cheap drilling, less than £1 million a well, this clearly makes a lot of commercial sense and something we are very keen to push and get after. The other part of that licence is the exploration part, which is targeting again the Witch Farm play I mentioned earlier. The new data is now in. Interpretation is underway. Again, that looks pretty encouraging. We had a partner meeting 2 weeks ago to discuss it. More work still needs to be done prior to committing to an exploration well. It's just nailing down, again, it is structurally complex. We need to really have as accurate an interpretation on this as possible. So we're still looking probably at 2019 at the earliest for an exploration well on the preferred broad main prospect there. And then finally, that's everything I've spoken about so far is really part of the European portfolio and part of our low risk near-term activity strategy. The final license is Jamaica, which is a little bit different. That's our real blue sky, high impact, super wildcat acreage. We're very, it's something we're still, I mean, it's one of those things that, whenever we do get to talk about it, we do get quite excited about it. It's such a huge acreage position. The license is well over 30,000 square kilometres. There's really positive petroleum indicators across the license, and we farmed in for 20% of this license, partnering Tullow, who have the other 80%. The plan on that is there's over 2,000 square kilometres of 3D seismic about to be acquired over the Calibri lead, which is the preferred prospect that's been identified, and that's scheduled to start in April. So that's all on schedule. That's looks like it's all going ahead and kicking off in April time. And the plan then would be, once that data's been in, process it, interpret it by the end of the year, and then start a farm down process jointly with Tullow through 2019, leading to a well most likely to be drilled in 2020, although potentially could be accelerated into late 2019, of which we would have a significant carry on. And just to remind you again of the potential there, I mean, the Calibri lead that the seismic is focused on, that looks like it has potential to produce 200 to 300 million barrels. But if that was successful, it's not a standalone. There's easily 15 to 20 further prospects within the acreage that we have that are of similar size. So, the room to run and the sort of the basin opening impact that first well has potential to have is huge. And that's really why we are, as excited as I said we are about that acreage. So that's probably a lot of information in quite a short time. Hopefully it didn't go on too much, but that's essentially the overview of the portfolio that we currently have.
Thanks, John. So I'm sure you've all gathered we've had a fairly busy close to last year and a very busy start to this year, accumulating additional licenses and adding to the portfolio, while also executing our existing work programs. And all credit goes to John and his team for identifying these opportunities and working them up and extracting value from them. And he's done a fantastic job, and that will continue in terms of new asset evaluation. We're not going to stop looking at other opportunities. What has happened and what is evolving, I guess, is the scale of the opportunities we're now looking at. They're bigger and they're getting significantly more material to the portfolio. I mentioned on a podcast last week that we've had a couple of super majors now, actually 3 super majors have contacted us and asked about potentially partnering. They're looking for junior partners, and the feedback that they've given us is that they like what we've achieved and how we've done it. They like that we've got proof of execution, we can actually do deals, and they like that we can raise money to execute work programs. So in terms of the portfolio, we will continue to look at adding to it, and we'll also continue to evaluate the best monetizing options that we've got with the existing assets. For example, we're sitting on a valuable asset now in Italy. At the appropriate time, we will evaluate our options on that. Do we bring it into development, or do we look to potentially monetize it? We're not at that decision juncture just yet, but we certainly have options within our portfolio, and we've always strived to do that when we've looked at opportunities. The question we always ask is, the day we buy is the day we sell. So the day we get into something is, where is the exit point along the line? And we'll continue to evaluate the existing portfolio to look at opportunities for maximising value. So just in terms of potential news flow coming up, John's touched upon most of it already, but in terms of the Jamaica seismic acquisition is planned to commence in April. Tullow went public on that last week in their annual report. In addition to that, we hope to spud the Coulter well in April-May time. And alongside all of that, or what's always bubbling in the background, is potential new acquisitions and new opportunities. Unfortunately, or fortunately, whichever way you look at it, I can't say too much about new opportunities because we don't want to lose the commercial high ground that we sometimes have. Our approach has always been to look at opportunities that have not been marketed publicly that we feel we can get a good deal on for our shareholders. So we prefer not to talk too publicly about them because to be perfectly honest, we just don't want to alert other companies to what we're looking at. It's as simple as that. And I think that's a fairly high level overview of the portfolio and commercially where we're at and the plans for the next couple of months. And I guess at this stage it's probably appropriate to open it up to some Q&A questions. And I don't know what the best way of doing this is. Probably, Darren, is it to somebody to start, take their phone off the mute?
Yeah, I think, Brian, can you hear me?
Yeah.
Yeah, I think the best thing to do is people just unmute themselves and they can ask a question, and then once they've asked the question, I'll just mute them again. But
sure.
I mean, I'm happy to kick off with a question anyway.
Yep.
In terms of funding, Brian, are you going to be sort of looking to sort of make it value accretive each time? So, you know, in terms of the raises we've had, you know, you've raised, and then we sort of seen a follow-up deal. Is that the sort of mindset that you're looking at the moment?
Yeah, I'm glad you've asked the question because it's nice to get that one out of the way at the beginning. You know, invariably we will have to go back to the market at some stage. We can't run the company on thin air. But, you know, I've already touched upon, we have a valuable portfolio as well. So we have optionality in terms of routes to financing. What we've done in the past and what we'll always continue to do is endeavour to go back to the market at the most appropriate time and reduce shareholder dilution and try and reduce any impact on existing share prices. What we've always done is go to the market with a deal in our back pockets. We've gone to the market twice. Both times we had deals ready to go. When we listed and we raised 3 million in July, we were fairly confident that we had the Tullow deal in our back pocket. It took a little bit longer to get that one over the line just because of the complexities of the size of the potential asset. It's obviously a game-changing asset if it is a success. That took a little bit of time to get that over the line, but it was in our back pockets. The placing we did Christmas week, again, we had 2 deals in our back pockets, being the Corallian farm-in and the Swift farm-in. So we'll always endeavour to tie up a placing with a deal, either with a deal or a deal imminent. And also, I think it's important to know, like when we've gone back to market, because I've just seen other placings that have taken place in the last 6-7 months, we've gone back to market at a price which has practically been no discount, and we have traded above that since. So every time we've gone back to market, we've added significant value. I mean, we were up 20% after we did the placing. So I think the feedback that we're getting, talking to people in London, you know, which we continuously do, is you know, every time we give you money, you seem to make us more money, which is, you know, it almost sounds to us like people are surprised to some extent, but the reality is that's our job. And you know, we're shareholders, so we want to make sure that we're raising money at the most appropriate time and we're creating the most value that we can. And you know, I think we've demonstrated that with the placings we've done, the value we've created and the deals we've added. But also, I touched upon this on a podcast that I did last week. I mean, to date we've raised 4.25 million. And we've built a portfolio with a low-risk NPV value of 250 million. And, you know, we can talk about NPV values and they're easy to manipulate because you can use a very exotic, you know, future price curve. But we actually use a fairly conservative flat price curve for our economic evaluations and our NPV calculations. So any, you know, increase in commodity price actually adds significantly to that NPV value. So the NPV value of 250 million is actually, you know, pretty flat price assumption and, you know, pretty conservative. So I think if you look at to raise 4.25 million and create a portfolio with a potential $250 million NPV value is not bad going.
Yeah, I think as an existing shareholder, I've been there from the placing and also participated in the last fundraise, and I'm really, really pleased with that approach. It's to be honest, a bit of a breath of fresh air. I know you're not an AIM-listed company, but you sort of sit alongside AIM companies at the moment in terms of market cap size. And, I for one am sort of happy to sort of incrementally participate in the fundraisers because of the progression and what the company's been delivering.
Well, thanks, Aaron. And just to add on to that, I guess, it's probably appropriate to touch upon share price a little bit because, I know every CEO says it, and I hate to sound like every other CEO, but the reality is our share price is not where it should be. And I think, again, the feedback I'm getting in speaking to London is that, we've just done so much in 7 months that the market is trying to catch up with us. But, we could talk about the share price all night long, and we could talk about all the negatives of a low share price. But if you look at the positives for a second, the positives of a low share price is it's a buying opportunity for our existing shareholders to top up or new shareholders to come in. So we should start to see increase in volume. And secondly, when it does move, it should move fairly fast. So I think, I prefer to look at the positives of the share price and the market cap, because I certainly don't believe our market cap is representative of our portfolio value. And I just think it's a case of having done so much in such a short time frame that the market just hasn't caught up. And what I'd also add to that is we don't plan on slowing down. Well, I hope that's a long-winded answer, but I hope that covers everything.
Hi, can I ask a question? Can you hear me, Brian?
Yeah.
That is a long-winded answer, and that's normally what I tell my missus when she says, why are you buying more Yorkshires? So to break it down in layman's terms, and I'm asking for your advice here, how in layman's terms can I explain to my missus that Jamaica 29 is going to be an absolute stormer, but in the very near term there's going to be value creation and uplift in the share price? I heard what John said, and I could speak to her about up dips and down dips and sidetracks and prospective wells, but that really don't help me, as I'm sure you'd understand. So if you could just give me a quick synopsis, I'd really appreciate it.
Yeah, and I don't want to get involved in any domestics, or I don't want to be the cause of any attentions at home, that's for sure. But
too late.
Look, Jamaica has its risks, let's be clear on that. We've always said that. What Tullow have done as the operator today is done everything they can to de-risk it as much as possible. They've spent over $20 million on this, of which we've pretty much got 20% up for nothing. So they have to spend a lot of money on de-risking it. It will be de-risked further when the 3D is completed. United Oil and Gas's investment, from my perspective, is one of those that if you come in, you just stick it in a bottom drawer and sit on it and leave it, because we are building a stable, solid business in Europe where we hope and where I think we're demonstrating you'll see solid annual growth. And I'm trying to be as non-technical about this as I can. But what we'll see is solid low risk growth in Europe, whilst we have this opportunity to really have a massive result for our shareholders in Latin America and Africa and in the Jamaica license, and we're continuing to add to those to those high risk big bang. We're continuing to look at opportunities in those regions. But I guess if you stand back for a second and say, well, look, where were we a year ago? Where were we 2 years ago? 2 years ago, John and I were sitting at my dining table trying to get a deal done. 2 years later, we've a market cap of nearly 15 million. We've 6 licenses. We've drilled a successful well in Italy. Sorry, we've 7 licenses. We've drilled a successful well in Italy, and we've, in the last 6 months, we've doubled the share price. And if you look at the recent research note that Barney Gray published, he's valuing the company at 15p a share, which excludes Jamaica. So I think the upside is still there. It's normally, I think when a share is new to market and it lists, a lot of people feel that they've missed the boat if they didn't get in early. There's no doubt in my mind that we're only getting going in our story, and the share price is still very, very low. To give you an analogy, it's a bit like, I think our share price, it's a bit like buying a Ferrari for the same price as a 25-year-old Ford Fiesta. I don't know if that analogy would help her understand the potential value in our share price.
I think that would help. That's a very, very good analogy, and the breakdown makes complete sense to me. And so, yeah, the breakdown makes complete sense, and you might have just saved me marriage. Cheers for that one.
Well, I hope to make you a few quid along the line as well. But
it'd be nice, wouldn't it? Dad, put me back on mute, please.
Okay. Question from anyone else?
Hi, Brian. It's Tom Griffin here. Can you hear me?
Yep.
Yesterday's RNS from Rebold was puzzling in that they stated Corallian are looking to increase their share in a couple of their projects, but they didn't state where those extra percentages were going to come from. Is that likely to have any dilution at all in United share of Coulter?
No, we have 10% in Coulter. That's 10% full stop. We've no plans to farm that down, and we do have an option to take another 10%. That option expires on the 31st of March. The reason we took that option was we're obviously looking at other things, and there's only so much cash that can be spread around. So we wanted to conclude a couple of other evaluations before we decide what's the best spend for shareholders' money. So we have 10%. To be honest, I have no interest in farming down below 10%.
Okay, thank you.
You're welcome. Anything else?
Hi, it's David Banks here. Can you hear me?
Hi, David. Yep.
Hi. So all of the deals so far have been, primarily exploration focused. Obviously, we've seen over the last couple of years a number of the majors disposing of, small holdings of producing assets, especially in areas such as the North Sea. So I'm wondering if you're looking at anything that's, any assets that are currently producing, something that will bring in relatively immediate revenue and cash flow into the business. Appreciate you can't say very much, but just an indication of whether that's the sort of thing you are considering.
Yeah, no, I'm actually really glad you've asked that question. It's a really good question. The answer to that is yes, we are. We're looking at opportunities that have existing production. What I'd add to that, though, is you need to be very careful when you're looking at producing opportunities, because you need to be very careful about abandonment and how that's treated. And sometimes, you have a sensible seller who has a sensible view on abandonment, and sometimes you have a seller who feels that they want to get out of their abandonment obligations and pass them on to us and our shareholders. So they're hard opportunities to find, but we are looking at opportunities. I touched upon it a little bit earlier when I said that, the evolution of the portfolio and starting to look at bigger deals. That is exactly what we're doing. We're looking at bigger deals that could potentially move the market cap considerably. Now, what I'd also add to that is, we're continuing to look at high impact opportunities for farm-ins, but I think, we have to get to a stage where we are looking at corporate portfolio acquisitions, and we are moving closer to that stage where the balance sheet's strong enough, the existing portfolio is strong enough, and more importantly, the internal team is big enough and wide enough to take on a portfolio acquisition. I don't want us to keep doing farm-ins. Admittedly, each farm-in we've done has been bigger than the last one, so we can see the growth within the portfolio. But at some stage, we're going to have to take that step to go from, a farminee to a portfolio manager, so to speak, or taking that step to acquire a portfolio. We are close to production with our Italian license. So, we're comfortable that we're on the road to production with that, potentially near-term production in our UK license and Watercross as well. So, whilst production is good and everybody wants production, we also want to grow the company and grow the value of the company. And sometimes that isn't always by going down the route of production. I think production was very much in fashion in London 2 years ago, and even up to a year ago, when we were trying to list the company last year, everybody wanted production. Since we've been listed, we speak to the London market pretty much on a weekly basis to keep them updated on our progress as much as we can, and to build as many relationships as we can. We've seen an evolution from pure production to people saying, well, where's the next big play coming from? Where's the next producing assets coming from? So we're starting to see exploration come back into fashion, and where we're positioned, or our strategy has always been to acquire a portfolio, so that when the cycle washes out and exploration is back in favour, which is we're seeing now, United will be really well positioned to create significant shareholder value. But another long-winded answer, but essentially, yes, we're looking at opportunities that are portfolio opportunities with mixtures of production, exploration and development, and we're also looking at standalone opportunities.
I mean, just to add to that, I think that the deals we've done, especially in Europe, have been things where there's near-term redevelopments, their appraisals are very low risk. I think we always saw that as where the biggest potential to add value was. So you're not risking very much. If you run the risk, I think, if you do go out and buy a pure production portfolio, that you just pay the NPV value for the portfolio you get. So unless you're buying, production, which also you can see clear development opportunities that haven't been exploited to date, or clear near-field exploration opportunities, it's not as attractive a proposition to us, and we think in terms of the investors, as getting into things where we can actually take something where there is very small risk, minimal risk, but where actually, we can bring it onto production and get to that point where we do have cash flow coming into the company, but build that organically.
That's actually a very important point, John, and it's a very important point to share, because a lot of the opportunities that we've looked at that have production, the seller wants full NPV value, which basically means that you might as well leave the money on deposit in a bank account, because you just become a price play. And one thing United Oil and Gas does not want to be is a price play, because you totally expose the business to the downside. So I think buying production assets, there has to be significant redevelopment opportunity for us to move the production levels considerably, and they're a little bit harder to find. They tend to come with a portfolio. So we're looking at a couple of options.
Perfect, thank you.
Brian, just Darren again quickly. You mentioned earlier that you had interest from, I don't know if you used the terminology, was majors or super majors, excited me a bit.
Yeah.
Do you see, that's going to provide the company with, as you said earlier, more potentially off-market transactions?
Yes, I do. Yes, I do. We John and I, particularly coming out of Tullow, we had a lot of exposure to senior executives in majors and super majors, and we've built good relationships with them. They've been keeping an eye on us, and they see what we've put together in a short period of time. They've also seen how we do business, and they've identified United as a potential junior partner. They have approached us about potential partnering in early stage opportunities like Jamaica. The question you'd ask is, well, yeah, okay, that's great for us, but what's in it for them? And what's in it for them is they get a second technical view from a technical team that they respect and they know. And secondly, they leverage off us, because we will be marketing that opportunity far greater than they will. So they get to leverage some marketing and some commercial via United. So we're really pleased about that, actually, and I'm really proud of that we're starting to get that traction at that level. And what that gives us, as you quite rightly say, Darren, is it gives us potentially off-market opportunities, similar to what we've done with the Jamaica license with Tullow.
That's fantastic. Thanks.
I just want to add a point on all of, we're talking about a lot of new ventures here. I mean, we have to kiss a lot of frogs. Let's be clear on that. You know, we look at a hell of a lot of opportunities, most of which we don't execute. So we're talking about opportunities here today with you guys, with majors and portfolio opportunities, and they all sound wonderful. But I think it's very important that we manage expectations. You know, we certainly see that the deals are there to be done. We want to go after them, but we can't do everything. And I think it's just important to make that point.
Hello,
Any more questions?
Hello?
Hello.
Yeah, my question is about Colterwell. When you are expecting to have a rig or schedule about rig mobilization, and also some issue being discussed across the paper about environmental permit issue. Do the company have all necessary permit to go ahead for the drill, Colterwell? And the last one is about 3D seismic update. When you are expecting to update the updated 3D seismic or for the Colterwell? Thank you.
Sure. Yeah. The Colterwell, the rig has been it's ready to go. The latest spud date that we have for mobilisation will be probably second half of April. In terms of the permitting, all the permitting, I mean, that's what, Corallian have been doing for a long time over the last, 6 to 12 months. The final sign-off on the environmental permitting comes with the rig inspection, which will be close to mobilisation time. So the final sign-off on that will probably not be until they actually inspect the rig. Now, we expect that to be a formality. Everything else is in place, so we don't see any showstoppers there at all. The one thing is, in the area it's been drilled, it's obviously got a touristy area. There are limitations on drilling, so once you get to July, you can't be doing any drilling offshore. So that means we will be, kind of the end of April, early May is the cut-off point that we need to be getting that well drilled by. So I hope that answers the question on the Colterwell. I'm afraid I didn't catch the second part of the question.
It was about updated seismic data 3D, which I was reading from the broker report that you are going to update in January.
It's on Colter again, is it?
Yeah, Colter.
Yeah,
Colter.
Yes. So there was a pre-stack depth migration piece of work that was being done, which is, I think, really trying to. It's a complicated structure, and the targets we're looking at are relatively deep in that structure, so it's quite difficult to image what's there. So they're doing as much as they could with velocities in the shallow to really crystallise and show as clearly as possible what's actually down there. That work has been completed. We have the final data volume. We have started the interpretation on that. I think the main thing for us was to make sure, first of all, that the structure is there and that it looks robust, which it does. So it's still there. It still looks like it's robust. We haven't updated all the volumes and work we've done on metrics. We've done on the previous data volume. We haven't updated all of that, but it actually looks as though, if anything, it's going to make it larger. So, it's been pretty positive. It's still a difficult area to image. There is still some. That really is the risk around it. You've got a well that's proven oil there. We know there's oil coming into the structure. We can map the structure. You can see it's there. The risk is really, whether or not perhaps there is something just a little bit more complex in the area there that we're not seeing on it. But I think it's. As these things go, it's as low risk as we're going to get. So that's all come in, and as I say, looks pretty positive.
Thank you. Thanks.
You're welcome.
John, would the plan be to drill Colter from which part?
So the plan is it's only very shallow water, so it's actually far cheaper to drill it via a jackup initial appraisal well. I think what the plan would be then is, given a success on that, and given the proximity of which farm and existing facilities there, and the fact that this prospect is within reach of the extended long reach wells that have been drilled from which farm previously, you'd actually drill a similar length well that's been drilled on that field and reach this accumulation. That would be the most sensible option for development. And I think as well, if you did it that way for the development, it would make environmental permitting an awful lot easier. Trying to put a permanent structure in the middle of Bournemouth Bay, I think would be something that would you would struggle with. So the obvious solution here would be to develop that through Witch Farm. Now, obviously, that's something that will have to be negotiated with Perenco, the operators of Witch Farm. But it would make sense from their point of view. They have ullage, they have spare drilling slots. There's been some high-level conversations with Corallian. They've had some high-level conversations with Perenco. So that's what we have been factoring into our model. So this will most likely be developed through the Witch Farm facilities and through long reach drilling from the onshore location there.
Thank you. When do we expect to hear an update on that?
Well, I'd say the well, we're expecting it to be April, May time. As soon as that's firmed up and we have a spud date, I would suggest we'll have an update at that point. And then obviously there'll be updates as the well is drilling and gets to the target. So I'm going to expect news flow from this from April onwards into June.
Thank you.
Any more questions?
Just a reminder, if you want to ask a question, you need to #1 to unmute yourself.
But just to go touch on the monetization of existing assets, did you say that you were in favour of them at this stage? Because you've obviously added a lot of value, especially to Selva. I think for a 1 million initial outlay, you've now secured production, which has multiplied the value of that. I mean, how likely are you to potentially, let's use the word, trade assets going down the line when you have more on the go?
Well, it's a good question. I guess we've always said we make decisions on assets at the appropriate time. Now is not the appropriate time to make a decision on Selva, but that might change in the coming weeks and months as we submit the development plan and as the development moves forward. We don't have a huge amount of capex to spend on that license until first production. The well was finished as a producer, so the cost actually to first production now is actually minimal to United. It's less than 150,000 euros, so it's quite small. So we don't have to rush a decision on that. We don't have big impending capex bills coming our way. You're right, we have created a valuable asset. We've de-risked it significantly, and I guess we will make a decision on that. I guess our preference is probably to take it into production. But we'll see how the next couple of weeks and months pan out.
Yeah, I think on that specific license, I mean, the production's there. That has a clear value that will be coming, which would be great for us. But the exciting bit there is the exploration upside that we think has a lot of value. And if we were to look to monetize it now, we'd obviously wanting to get value for that, because we think that's very low risk upside that we'll be getting after in the next 12 to 24 months.
How much bigger? Yeah, that East Selva, is it? How much bigger do you think East Selva is than the existing historical well which you brought back into production?
There's not a lot of data over it from what we can see. I mean, you can see there's a clear structure there. The 3D data will help define that better. But from what we've seen, I mean, it could easily be twice the size of what we've just discovered at Selva. And that's not the only target, as I say, with the fact that there's highlighted, the well highlighted the opportunity that there might be more undrained sands across this broader structure. It's a large ridge that runs, northwest to southeast right across the block. There could be more things that we want to get after as well.
Okay, interesting.
Just one more question from me then, regarding Jamaica. Am I right in thinking that your total exposure in terms of financially is 1.5 million towards the 3D, and it's pretty much capped at that because your 20% you could farm out 10% or so, and that 10% would it give you complete free carry on the drilling activities?
You're almost right. There is no cap to start with. United Oil and Gas is on the hook for 1.5 million this year for the acquisition of 3D seismic. The plan would be then that after that's acquired, it would be processed, and we would work with Tullow on a joint venture farm down as a partnership. And we would probably drop from 20% down to 10%. And hopefully have a complete free carry on an exploration well in late 2019, early 2020. So, in theory, the aim is that our maximum exposure will be about £1.5 million. In the unlikely event, and it is a highly unlikely event, we didn't get a partner for an exploration well, we would be paying 20% of approximately a well of $35 million US dollars. So, with the time that well gets to be drilled in late 2019, early 2020, I would be disappointed if United were not in a position to pay our 20% way on that well. But that wouldn't be the plan. The plan would be to get a joint venture farm down and a complete carry on that exploration well. Now, again, if you just step back from that for a minute and put that into perspective, as John has said, it's potentially, first well alone is a 200-300 million barrel recoverable well, and there's potentially 15 to 20 more of them. So if you just even compute the numbers on that, we will be getting all of that for £1.5 million potentially, which is a remarkable farm-in in anybody's mind. That is a remarkable deal that we've cut, and a remarkable opportunity for a company of our size. I said this at the time, and I think it got a little bit lost, but I think actually it's partly our fault for maybe not communicating the commercial potential of this asset, this opportunity, along with the technical story. But it's an opportunity that companies of our size just don't get ordinarily. It's normally a group of majors do this. Tullow were quite happy to sole risk this and do this 100% themselves, but we spent months persuading them to give us 20%, and we spent a long time outlining what we could bring to the table. They know as well, but still enough. It's still a commercial deal that has to work for everybody. And as an opportunity, it's one of the most exciting, high impact, exploration opportunities that we've seen, not just since we formed United, but in our careers. So we're hopeful. It's certainly high risk. But if you look at the potential capex exposure of £1.5 million, United Oil and Gas won't fall over on the back of that. It's high risk, but the upside is absolutely, it is huge, absolutely huge. It's, if that first target is a success, we would be inundated with offers to buy that office. It will just be, it's opening up a whole new frontier. It's 32,000 square kilometres of acreage. It's essentially the entire south coast offshore of Jamaica. It's absolutely huge. If you just, we put together a slide where we took the acreage and overlapped it with the North Sea, and that will put it into context. The size of this acreage position, it's huge. If it comes in, use the phrase game changing. I can't think of a bigger, better phrase to use than game changing. It's just huge. There's no doubt about it. And Jamaica was always on our minds from the moment we started the company. I wanted to get a piece of Jamaica into the portfolio because I just felt it could be, that license that is game changing and could open up so many more opportunities for us. And we worked on it for a long, long time. There was many meetings had with Tullow, to find common ground to move it forward. And we managed to do that. And I think we've got a world-class asset, potentially a world-class asset in our portfolio.
Well, I read an article that some local fishermen had reported oil seepage to the surface. So I'm very excited about it.
Yeah, well.
Yeah. That seep that they spotted. That's actually, when you look at where the prospect is and where the oil is actually being formed, the prospect sits directly between where the oil is forming and where that seep is. So any oil that's got to that seep should have come through the prospect we're targeting. So it's good news.
What's also nice about Jamaica, I think when we farmed into it, people thought, it's not going to happen for 4 or 5 years. It's one of those long lead things where you're not going to see anything happen for years on it. And when it does happen, it's going to cost shareholders a fortune. It's not going to cost the shareholders well, one and a half million is a lot of money in any man's language, but in terms of our market cap, it's manageable. And we're seeing activity immediately. We told up in public on this. We'll be acquiring seismic that will commence in April. And look, we know the team working on this. It is the A team. We know them really, really well. We work with them. The team themselves are not the type of people that will sit on this and do nothing. This asset will be worked up and will be de-risked. It won't be, whilst it might appear like a long lead in comparison to the rest of the portfolio, it isn't really. If you look at when we're the point at which we've entered the license and the life cycle, it's pretty much 2 years, 18 months to drill. That would normally, to get a farmland that we've got, you'd have to be in 5 years to drill. In advance of a drill, we're in with about 18 months to drill. So it's moving. The license is moving along nicely. We're very happy with the progress Tullow have made. And I go back to the point. Tullow spent a lot of money to risk in this that we've got the value of for nothing. They're not going to spend that money without looking to continue the momentum and move the license forward.
Yeah, they've spent 20 million on the 2D, haven't they? So pushing forward to the 3D gives some confidence that that what's come out of that is interesting.
Yep, absolutely, and more to the point, it gives us confidence because we've worked with Tullow, we spent a lot of time technically working with them on this, and both companies are very much aligned on the way forward on this. So we're really, really excited about it. It's a great opportunity. It's a low-cost opportunity for what could be, huge NPV values. I might also add, when I talk about NPV values of $250 million, 200 million of that is assigned to Jamaica. I mean, that 200 million could be even a multiple of that, depending on the results of the first well. So it's really, really exciting, and it's a great one to have in the portfolio. Tullow are a fantastic operator. I am biased because, Tullow's in my DNA and John's DNA, but they are a fantastic world-class operator. They will do a great job moving this forward. And, what we will do now is look to add to that and look to add to the European portfolio and continue to grow the business sensibly and look to create as most value as we can in our share price.
Sounds pretty good.
So I think we're getting close to probably the end of the call. Is there any other final questions from anyone else for Brian and Jonathan?
Yeah, just one from me. Can you hear me?
Yeah.
Yep.
Okay. Wishing you all the very best. Not that you need the luck, or not that you need any good fortune, because you want this actually more than we do. And personally, I believe that you need this more than we do. Not only is your reputation at stake, coming from your dining table. I'm sure you don't want to be sitting back there. So, with that in mind, thank you very much for your time on my behalf before I depart. And I'm sure you'll manage the share price to make sure that it's where it should be, and that the market knows exactly what you have. And once the value is added, those that have supported you from the off will benefit. So with my good fortune, I wish you well.
Thank you very much. Thank you.
Thank you.
Okay, so I think Brian probably closed the call there. I don't think there's anyone else.
Yeah. Well, look, just thank you everyone for joining the call. You know, we've made rapid progress from where we were even 6 months ago. We're going to continue with that momentum as fast and as hard and as sensibly as we can. And you know, I strongly believe we've a really exciting 6 to 12 months ahead of us. So thank you all for your support.
Thank you very much. It was a very good update, Brian.
Cheers. Thank you. Thanks.